Hey guys, it's Nick, and in this video, I want to talk about the Elon Musk bid for Twitter and why it is proof we are living in a clown world. So, is Elon's offer real, or is it just to get the stock price up and dump it because he did not get on the board of directors like he planned? Or was his plan to just greenmail the board of directors? Also, why did the board just today approve a poison pill defense? And what does that mean? And lastly, where does a Saudi prince fit into all of this? There's a lot involved, so let's get started. Musk reported in an SEC filing on March 14th that he bought 9.2% of Twitter, or about $2.9 billion worth. Musk then made an offer of $54.20 per share, or about $43 billion for Twitter, which he said, "It's a high price and your shareholders will love it." Meanwhile, Saudi Arabia's Prince Al-Walid bin Talal, who owns about 5% of Twitter, said the deal doesn't come close to the intrinsic value. And just today, Vanguard now announced that they now own 10.3% of Twitter, which is more than Musk. So to start, Elon says, "I invested in Twitter as I believe in its potential to be the platform for free speech around the globe, and I believe free speech is a societal imperative for a functioning democracy." So he wants to buy Twitter to decrease the censorship at Twitter and even make the Twitter algo open source so everyone can see how they censor or apply their terms of service fairly. So in a normal world, this would be a good thing. But in the clown world we live in, this is a terrible thing. So a lot of people are angry that Elon is going to reduce the censorship on Twitter. And here's Ellen Pao, the former CEO of Reddit, in a Washington Post op-ed. And in it, she called for the regulation of social media platforms to prevent rich people from controlling our channels of communication. This in a newspaper owned by the billionaire Jeff Bezos. So even Musk had to laugh at that and commented LMAOOO. But she's one among many, and Bloomberg opinion senior columnist and MSNBC political analyst Tim O'Brien called the move bad news for free speech. Okay. So more free speech is bad news according to him. Okay. So the Twitter board of directors, instead of doing what's best for the shareholders, is trying to sabotage this bid with a poison pill that they just passed today. So this poison pill basically offers shareholders discounted Twitter stock if someone accumulates more than 15% of the Twitter stock. So everyone except Musk would be offered discounted Twitter stock if he accumulated more than 15% of Twitter stock. Now, this would dilute his holdings and make it much more expensive to buy out Twitter, but it would also damage the value of the Twitter stock and deprive shareholders of getting that $54.20 for their stock. If I was a shareholder, I would be very angry at management and the board of directors, since their only job is to increase the value of shareholders' stock, nothing else. So is this $54 offer a good deal for shareholders? Well, I don't own the stock, but if I did and it went down to $30 from about $80 a year ago, and somebody was offering me like a 50% premium above where it was before Elon started buying the stock, I would be jumping at the offer. By the way, Twitter has lost money for the last 2 years, so it's not exactly a money printing machine at this point. That said, Saudi Arabia's Prince Al-Walid bin Talal thinks the offer is too low. So should investors put their weight into what he says? Well, first of all, he's a big Twitter investor, so of course he's trying to get more money for his stock and is talking his book. And if you never heard of him, here is some background info. In the late 1990s, he was known as the Saudi Arabian Warren Buffett, and he was featured in all kinds of magazines and finance news shows for his big investment in Citigroup in 1991 at about $10 a share, or about $3 a share split adjusted. So he bought it in 1991 around here at $3, and it went as high as about $57. But now it is back around $5. So let's see what happens the last time he said a stock's share were too low and he was not selling. That was in November 2007 about Citibank. I will sell nothing. We are selling nothing. Citibank at this price is ridiculous. Citibank does not deserve that. Citibank deserves a lot better. So this is about the place where he said Citibank is cheap and he's not going to sell any, about $330, and now it's like $50. So basically he bought at $30 split adjusted in 1991, and now it's $50 31 years later. Now, not all of his trades were bad. Here is a genius trade he made of 5% of Apple. He bought in 1997 for $115 million. And had he held it today, he wouldn't be worried about Twitter because that stake would be worth about $135 billion. Now, I'm not sure how much of it he still holds, but all of those stocks are in his Kingdom Holding Company, which he owns 95% of, and it has a market cap of $36 billion. So obviously there is not 5% of Apple stock in here anymore. So he kept Citigroup stock and sold Apple stock. Ouch. Oh, by the way, did I mention that he was kidnapped or, quote, arrested for corruption by Crown Prince Mohammed bin Salman, his cousin, in Saudi Arabia, and held in a luxury Ritz-Carlton suite for 83 days until he paid Saudi Arabia about $6 billion or 33% of his wealth. So I don't know what his real opinion is about free speech, but if he wants to keep the rest of his money, his opinion will probably be whatever the Saudi government says it is. So is Musk serious about buying Twitter, or is he using the old 1980s tactic of green mail, where a corporate raider like Carl Icahn would buy up a piece of a company and then threaten to buy it, and then the board would pay green mail, kind of like blackmail, which is money to make him go away by buying up his shares at a nice premium. Personally, I don't think this is what Musk is doing because it's not worth his time and effort just to get a 20 or 30% gain on his investment. When he does things, he usually does them pretty big, right? So does he have enough money to pay for the other $40 billion or so of Twitter that he doesn't already own? It's unlikely that he's going to sell his Tesla stock to pay 100% cash for Twitter. He owns about 170 million shares of Tesla, and about 88 million of them are pledged for previous loans he took, probably when the valuation of Tesla was much lower. He's probably going to look to finance it with debt, like in a leveraged buyout, which is typically about 60 to 80% financed with debt. So he would have to come up with maybe another $10 billion, which he can probably do himself or come up with a few partners to do it. So is the stock really undervalued? And what does the current stock price say about the deal and the potential for other bidders? First of all, just because the stock was almost $80 last year, along with all the other money-losing tech stocks, does not mean the stock is cheap or undervalued. How do I know? Well, the stock market is open 5 days a week. So if Twitter was so cheap, the same investors that say it is cheap can put their money where their mouth is and go and buy Twitter stock all the way back up to $80 a share if they wanted to, right? But no one is doing that. Now, if Elon is offering $54, why is Twitter stock at $45? It's because the market doesn't give the deal much chance of going through, either because they think Elon is not serious or cannot raise the money, or that the board will stop the deal with the poison pill. Also, if there was a lot of other potential bidders for a competing offer, you would see the stock trading at or above the $54 Musk offer. That's how you would know that real people with real money thought Twitter was cheap at these levels. One other thing, investors who are serious about buying a company put out a tender offer to all shareholders to sell their stock for the offer price. So if you are a shareholder, you get to vote with your wallet and take the $54 offer, whether the board likes it or not. Maybe Musk did not do this because he expected the poison pill defense. I don't know. So what do you do as an investor? If you thought the deal would go through, you would buy now at 45 and make about 20% on your money. Of course, it's not so easy, and that's why the stock is not near the $54 offer. Personally, if I was a shareholder and I saw this news come out for the $54 offer and the Twitter stock actually was lower on the day at 45, I would probably sell it. Let me know what you would do in the comments below if you were a shareholder or if you think the deal will go through or not. I hope you liked this video, and I'll see you in the next one. Thanks for watching, guys.